Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Thursday, November 9th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. And before I jump into the chart, just want to remind you that this week we've already put out a 10-minute video analysis on Nike. Another one will come out today, Thursday. I'm not sure exactly which one. We collaborate, in the mornings, and then we put out a 10-minute video on another stock pick. So check out wickedstocks.com. You'll get that 5-day free trial. You'll be able to see all of it for free. So on with the charts with Apple. Start with the big picture, work our way into the day itself. This is a weekly chart. Just to remind you that 165.40 to 166.82 does represent long-term support that when settled above last May indicated longer-term bullish continuation. Up to 230.62 is my longer-term objective by this point next year or sooner. That is the big picture play on the way up. We still have this 186.66 channel top that has, every time we've tested this mid-160s long-term support, become an immediate 1 to 2 month target that is then narrowed and was actually about a week ago when we settled above this 173.41 descending 1/3 speed line. This is the daily chart, and we closed above this area. Let's see, Wednesday, Tuesday, Monday, Friday, Thursday. Reminding myself of the Godfather. I don't know if you know what I'm talking about, but Anyway, so about a week ago, we closed above the 173.41 descending 1/3 speed line. That then indicated the upper, now mid 180s as a 2 to 3 week objective. That was, of course, considered a 1 to 2 month target every time we have tested the mid 160s. So here we are. And in fact, on Tuesday, we closed above this meaningful blue line, horizontal mostly channel at 180.39 that, if tested today, can contain session weakness, and above which we maintain a 3 to 5 day buy signal up to 185.38. Now we've pushed into and even slightly settled above this intermediate structure at 182.70, which is still a pretty classic channel structure that does offer decent intraday trading ability or opportunities, I should say, for aggressive day traders. So opening above 182.70, we could bottom out here for the day and perhaps within the day reach the 185.83 channel top, which combined with the same formation on the weekly chart at 186.66 may well contain buying not only through next week, but even into December trade. And we can, from 186.66, fall all the way back into the mid 160s again within a month or two of testing 186.66. So I will say that if we push into, this mid 180s, 185.83 to 186.66 area over the next few days, your long position that you may have established either A, about 3 weeks ago when we were testing the mid 160s, or B, about a week ago when we settled above 173.41, or C, 2 days ago when we settled above 180.39, that whatever the time horizon is, you may be long, and I would suggest taking profits in the mid 180s. That doesn't mean that I then expect the market to fall back into the mid 160s within a month or two, but according to channel dynamics, it is certainly allowed, and that is the play. Playing the short side once we push into the mid 180s. So, if we happen to today, for instance, test 185.83, I would unload long positions that you have. If you're a 3 to 5 day swing trader, you're playing the short side back to 180.39. If you're a 2 to 3 week swing trader, you're playing the short side back into the lower 170s. And if you're more of a 1 to 2 month swing trader, or if you trade both sides of the market, as we reach into the mid 180s, you're then anticipating the mid 160s. If you're an options trader, it might mean just reaching for 165 out of the money puts that don't expire. I would go at least 3 months out on that, maybe 6 months. This could take the better part of 1 to 2 months, and you really want to eliminate the time decay element. You're buying a pricier put, of course, but I wouldn't want to see you buy a 165 out of the money put that expires in a month, only to see it decay to absolutely nothing as we then presumably approach that price level. So that is kind of, the trade setup as we approach the mid 180s. Of course, if we close above 186.66, this is a weekly chart. And so that would be a weekly settlement tomorrow, Friday, above 186.66. And with that, I would expect within 2 to 3 weeks, the 198.23, July 23, all-time high. And as I said earlier, over the following, this could be a 3 to 5 month move. It could take into the middle of next year, but I would then anticipate this 230.62 long-term channel top. So if we settle the week above 186.66, you should position yourself, if you're an investor, that is a long-term play, up to the 230.62 channel top and rising. You might reach for 240 out of the money calls that don't expire for at least a year if you're an options trader, if that's what you like to do. But until then, as we push into this mid 180s, you may reach for 165 out of the money puts that don't expire for at least several months. Let's go to the downside here and talk about the possibility of breaking 180.39, a level that once again can contain session weakness and above which a 3 to 5 day buy signal remains in effect up to 185.83. But if we break 180.39, 178.77 is in reach today. That can contain intraday weakness. And if we close back below 180.39, good high through next week, the following 3 to 5 days then in reach of this 173.41 speed line where we could bottom out through the following week, through next week, even through the rest of November. We could bottom out at this 173.41 speed line through the rest of November and turn back up into the mid 180s again. Or I shouldn't say again because we've yet to test it. We've pushed into the low 180s. 183.45 was Wednesday's high, and that's the highest we've actually been for several months. You have to go back to this time frame, early September. So once again, closing below 180.39, I see no good reason to be long Apple if your time horizon is 3 to 5 days, where we could bottom out into later November, possibly through November, and from here run back up into the mid 180s. So I think that pretty much summarizes it for Thursday's Apple report. Please click like, share, subscribe, and check out wickedstocks.com. Take advantage of that 5-day free trial. I don't think you'll regret it. You have a great day. I'll be back tomorrow with Friday's Apple report.